Day Trading Education by Nexgen Software Services, a Fibonacci add-on for NinjaTrader's platform. Please read the disclaimer. Hello and welcome to Nexgen Software. We look forward to teaching you how to day trade Fibonacci. One of the first things that you're going to do after you sign up for a demo is you're going to start working your way through the educational page on our website. You're going to start by downloading the trading plan. You're going to start by watching the introductory video. And then you're going to start learning how to track your trades and learn what each of the individual pieces are necessary to make a really, really good trade. And in our trade tracking sheet, you'll see here if you hover over the words themselves, the descriptions up at the top, it'll tell you what we're looking for. When we're looking at our trigger lines and we're doing some trigger line comparisons, we set up essentially the best looks that you can possibly get for going long or short with trend trades on the smaller charts. We've got a number 2 look where you're going to be in a transition phase. Maybe you've made a bottom at Fibonacci or you've made a top at Fibonacci, and the trigger lines are going to have a very specific look that will allow you to take advantage of that situation with the trend trade on your smaller chart. Or number 3, the look that will be least likely to succeed doing trend trades on the small chart. And we're really going to focus on doing trend trades with you first, getting you to the point where you can actually make some money, be very, very consistent making money day in and day out. And then once you've done that, then you'll be able to really take that knowledge and apply it to any market and any time frame that you see fit for day trading. So let's get into it. All right, so as you've seen from the introductory video on our website, there's 3 different trigger lines that we have on our chart. And again, let me go through these with you just so you can understand. The first trigger line is what we call our small trigger line, or it's just trigger lines. And this is a 20 period moving average. So it's using the last 20 bars to develop its calculations. The middle trigger that you see is literally the exact same calculations as the first one. Instead of using 20 bars, it actually uses 40 bars. So it's a little bit of a slower moving average. And then the third one that we use, which is over here, which again, you've seen this in the introductory video, is what we call our synthetic trigger. And depending on which chart you're using, what this represents is the small trigger line values from a larger chart. And when you're looking at trading, there's 3 different configurations that you're going to look at. So the first configuration, and really what we call our number 1 look, and you'll see, let me show you exactly the bars that these happen on here. So there's one there and there's one here. And this configuration, you'll see it in the tracking sheet. Very, very straightforward. Number 1 is when the small triggers versus the larger 2-time trigger versus the synthetic triggers, when they all agree, that's when you get your best shorts or your best longs for trend trades. So again, let's take a look at that look here on our chart. We have to have the first small trigger wide into the downside, and it has to physically be below all of the other trigger lines. Number 2, you must have your larger trigger, the 40 period moving average trigger, going down as well. And again, it's a relationship of trigger versus trigger versus trigger. And when you get this set up where you've got the synthetic triggers crossed down, the large triggers crossed down, and the small triggers physically crossed down and physically located below all the other triggers, you get the highest probability trend trade. During this pullback, we're going to look for an entry either at Fibonacci areas or mid bands or Fibonacci areas on our smaller chart. So again, this look right here is the most important look that you're going to have. And you'll see the same thing in reverse over here. You'll see the same small triggers are crossed up and physically well above all of the other triggers. you'll see the large triggers are crossed up and physically above the crossed up synthetic triggers. And again, this is the absolute best look that you're going to have. The number one look, highest probability. Most of our traders over the last 20 years put this look at about 80% plus for trend trades winning from Fibonacci areas. So again, that's the number one look. You're also going to see a variation of that where the small triggers are still going down and all of the triggers are going down and you get a pullback. But the location of the small triggers physically inside of the other triggers, the larger triggers. See that right there? So inside of that circle, the small triggers are starting to get inside of the larger triggers. That's a warning sign. That's a warning that you need to go look at the smaller charts and determine whether or not the trend is coming to an end. So again, two different looks. Number one, you're going to take a trade, period. It's just too good of a look. Number two, you're going to continue taking trades, but you're also going to manage your trades a little differently once the small triggers get inside, and you're going to start looking for transitions in your trends. Now, the third part of this is what we call a transitionary period. So again, I think this is pretty straightforward. You're going to see this used a lot. The number one look long, the number one look short. Obviously very, very simple, very, very easy. This is the look that the new users should focus in on the most. Now, you're going to, at some point, obviously many times during the day, you're going to get to a transitionary period. And again, I'll leave these number one looks over here in white with circles. But again, you have to use your imagination for a second here. Let's say you've been through the videos. Assuming that this is a reason, right? So here, I'll write it on the chart for you. This is a reason why the market turned. And again, the reasons are, different. Sometimes it's multiple time frame fibs with divergence on a small chart. Sometimes it's fibs on a large chart. Sometimes it's whatever the reason. So when we have a reason why the market turns, divergence with fibs is one of our trades. What you're going to be looking for your first easy trade to go the other way is you're going to be looking for these small triggers to transition at least inside of the synthetic triggers. And realistically, when they get below the triggers, so again, even though you don't have all three of them crossed down, because of the reason why the market turned, fibs or whatever the reason, one-to-ones or prior divergence highs or lows, whatever the reason why, you're going to stop taking long trades and you're going to start to have short trades. And again, these short trades, these are going to be the ones coming off of tops and bottoms. These are going to be the ones that really, really are your transitionary trades. So you're going to get 2 out of the 3 triggers to agree with a trend trade on the smaller chart. And again, the logic behind this is that you must have a reason, then you must have the trigger line strong and transitioning below, and then you must have 2 of the 3 triggers crossed down, and then this will be really your first trend trade short. This will be your second trend trade short, and then this will probably be your third trend trade short, and because the triggers are inside, you're going to transition to the upside. Now, two looks so far. The number one look and synthetic triggers crossed up and a transitionary look. One of the other looks that you're going to get is going to be, it's essentially chop. So watch what happens. We'll just spread this out a little bit for you here. And you're going to end up with, again, you're going to end up with one of the triggers coming down, the synthetic triggers coming up, and it's going to basically apply pressure to the top of the market to come down and the bottom of the market to go up. And you'll see this, essentially it's when the small triggers are physically between both opposing large and synthetic triggers. And what it does is it compresses the data down and it squeezes everything together and everything gets really, really tight. The important thing to remember about this is number one, pay attention to the areas. Number two, don't try to trade when the small triggers are stuck in between opposing large and synthetic triggers. And then number three, when the small triggers and all the triggers agree again, which you can see happens right here, this is the point where the small triggers are above, the large triggers are crossed up, and the synthetic triggers are crossed up. So you're really waiting, and again, you can kind of see how this happens. We get a larger push to the upside, which is great, but then we transition smaller triggers in between both. And it's this in-between look is where most people will lose the majority of their money. We want to stay out of that sideways choppy action. We want to have either all trigger lines going up with the smalls above, a reason why the market turned with the small triggers wide and below, and at least two of the three cross down, or, ideally, which is not always the case, but we'd like to have all three of them cross to the downside, or all three of them cross to the upside. So you'll see as you'll start to work your way through the trigger lines, the transition when the small triggers get above or below and two are crossed, the really strong look, the last trend trade look with the transition, and then you'll get a trend change. And then you'll get a really strong look, and then you'll get a second trend trade. Again, just read the triggers. See how the small triggers are getting inside? And again, it's not that you don't get more trades, but you'll start to see. You'll get maybe one more trade, and then again, when all the triggers get bunched up and get inside, this is where you go to your small chart to let you know when this is going to be over and ultimately when we could transition to go the other way. And again, transitioning is nothing more than the small triggers and the large triggers both being crossed up or down, the small triggers physically being below, and again, you can kind of see what we have over here. We have a transition to the upside. So where the small triggers physically get back above the large triggers, and then you have two out of the three going to the upside. And again, if you have to keep context alive here. If this was Fibonacci support at the bottom, 2 out of 3 triggers going up is a good enough reason to go long. And again, you'll start to see, this right here is where we probably would have had a long trade in here. But this is where we start to transition, small triggers below. And again, you can see what happens if the trigger lines fail to get above. This trigger line read is the same read that we use on pretty much all of our charts. One of the other looks that you'll see in the trigger lines is small triggers will cross up, but they don't physically get above the larger triggers. If there's a reason, such as Fibonacci or mid-bands, to go short here, we're going to take an attempt at another short, as long as the small triggers remain below. Very specifically, when the small triggers get above, this is when the party usually is over and then the market transitions. And again, you'll start to really recognize as you study your trigger lines, you'll start to see, a mismatch where some triggers are crossed down and some triggers are crossed up, and you really, really have a difficult time with doing any trades in these areas. And then you'll see very clearly where the market will start to transition, and all of the triggers will agree at the same time, and you'll end up with some really high probability trades. And again, you can use this on NinjaTrader 8. If we look at NinjaTrader 7, this is our same trigger lines. It's the same calculations. It's the same transition. It's the same number one look. It's the same weakening look here. And you can see a transition here. And again, you can see the number one look. Remember, all 3 triggers going up with the small triggers above is the number one look. You wait for that look, you wait for the areas to help you out, and you're really going to have an easy time, whether you're on Ninja 7, Ninja 8, really any of our platforms. This is the ideal look for taking longs or shorts.